Hello, we hope everyone is doing well. Welcome to Sanford's Software and Internet Monthly Market Report for April 2025. As usual, we are going to be reviewing the previous month's M&A and venture capital activity across the entire US and Canadian landscape. So, let's first dive in on the M&A front. The month of April saw just under $12 billion invested across 120 transactions, bringing the year-to-date median revenue multiple to 6.3 times. Compared to March, there was a decrease in deal value as well as deal volume. Some notable transactions include SolarWinds being acquired by Turn River Capital for $4.4 billion, Paychex closing on its $4.1 billion purchase of Paycor, and Clearwater Analytics acquiring Enfusion for $1.5 billion. Based off the first 4 months of activity, 2025 is expected to see $277.6 billion invested across 1,707 transactions. This would mark a 69.9% and 2.1% increase respectively. The start of 2025 has seen deals with large disclosed valuations, and it will be interesting to see if this trend continues throughout the current macroeconomic uncertainty. Now, we'll move on to revenue multiples in the M&A environment. April saw the beginning of Q2 2025 and had revenue multiples trading in a tight spread, with the median being slightly below that of the previous quarter. Additional disclosures will be required for evaluating underlying market conditions, but these metrics will be monitored closely this month. Non-SaaS multiples performed exceptionally in April, once again surpassing SaaS multiples and creating an inversion. While we would expect this inversion to eventually course correct, it is a promising sign for market conditions to see multiple expansion from non-SaaS companies who have traditionally traded below its SaaS counterparts. Deal volume saw a slight decrease compared to March, which can largely be attributed to backdated transactions yet to be announced. The figure was also below the last 12-month average of 147 deals. While internally, we have seen a lot of activity that should set the stage for more deal announcements later in the year, the current uncertainty in the macroeconomic climate has not been optimal for closing M&A transactions. That's all on the M&A front. As usual, we'll now move over to the VC activity for the month of April. The month of April saw $12.4 billion invested across 522 transactions, with a median deal size of $5 million. Compared to March, there was a decrease in deal volume, but an increase in deal value. Some notable deals in April include Safe Superintelligence raising $2 billion, Plaid raising $575 million, and Skilled AI raising $500 million. The 522 deals in April were below the last 12-month average of 648 and marked a decrease month over month, although backdated transactions may change that over the coming months. Compared to March, early and mid-stage deals were down 24% and 11% respectively, while late-stage deals increased by 2%. With these additional multi-billion-dollar VC rounds being announced, 2025 is projected to see over $260 billion invested across approximately 7,400 transactions. This would mark a 20% decrease in deal volume, but a 153% increase to capital invested. As mentioned last month, the lack of IPOs from fast-growing software companies has led to unprecedented amount of 10-figure funding rounds. As always, we'll conclude this month's video by having a look at revenue multiples in the VC landscape. With some additional disclosures, we are now seeing all three stages of funding rounds having an increase compared to 2024. Current VC market conditions may be tracking for lower deal volume, but investor preferences appear to be for larger funding rounds at premium valuations in a true quality versus quantity situation. That's all for this month's video. Thanks very much for watching. Be sure to reach out through our website, sanfordadvisors.com, if you have any M&A related questions. Thanks.